thing that we want to do right now is to invite the president of the Chartered Institute of Bankers, Ghana, if you like, our host and the owner of the house today, to give us his opening remarks and to welcome us in. Would you join me to welcome Mr. Ben Amenume, please? Mr. President, the floor is yours. Mr. President, you are muted, please.
Thank you, Dr. Noel Tagoe. Ladies and gentlemen, permit me to acknowledge the council members, fellows, associates, and students of CIB, all our guests, panel members, and moderator. Good morning to you all. I welcome you to CIB Ghana Thought Leadership event on banking the real economy. First, the topic for our conversation today is an important one, truly connected to the growth and development of our economy. It reminds me of a common pushbacks bankers received from MSMEs who need quick and prompt decisions on their loan applications, whilst banks also want to ensure compliance of their credit policies. Second, our panel members and moderator for today's conversation are seasoned players in the financial and the MSMEs sectors in Ghana. I believe they will examine the challenges, opportunities, and collaborative efforts required to promote a conducive financial ecosystem for all parties and also for the growth of our economy. I therefore encourage all of us to actively participate and share our perspectives. Thank you, CEO and staff of the Institute, for this program. I strongly look forward to a fruitful dialogue session. Thank you once again. God bless you all.
Thank you, Mr. Ben Amenume. That was truly presidential. We have as our panel members, very, very seasoned and experienced members in the financial service sector. So I would have Mr. John Awuah, who is the Chief Executive of the Ghana Association of Banks. He'll be one of our panelists. Other panelists will be Ms. Kosi Yankey-Ayeh. She's the Chief Executive of Ghana Enterprise Agency. We used to be NBSSI, National Board for Small Scale Industries. And then we have from GCB Bank, Mr. Socrates Afram, who will join us at 11 o'clock. He's the Deputy Chief Executive for Finance at GCB Bank. And then we have Mr. Robert Dzato, who is the Chief Executive of Chartered Institute of Bankers, Ghana. Now, this is going to be a running order for today. I would ask the three panelists who are with us here a series of initial questions, the first questions, and then we'll take a poll. We'll take a poll as asking you, the audience, to come in and answer two questions for us, which would form part of our conversation later. And then we'll go to the second round of questions for the panelists, and by which time Mr. Socrates Afram from GCB would be able to participate with us. And then we'll open it up for questions and answers. We intend to use between 30 and 40 minutes for questions and answers from the audience. Please remember to put your questions in the chat box or the chat facility on Teams, and we'll be reading the questions from them when we get into that space. And then after the question and answers, we'll ask the panelists to give us their closing remarks and their closing pearls of wisdom. And then I would also invite you to fill the evaluation forms that would tell us what we got right for this event, what we could improve for this event, and what kind of events you want to see going forward. If Chartered Institute of Bankers Ghana would help drive your improvement of your knowledge in this space and in adjacent spaces. So thank you very much once again for joining us, and welcome. Now, my first question now goes to Mr. Robert Dzato, Chief Executive of Chartered Institute of Bankers Ghana. And the question is this. I mean, this institute is the one who is organizing this event, and you chose the topic, banking the real economy. So 2 questions boiled in one. Why did you choose this topic, and why is it important?
Thank you very much, Prof. I just want to double check if you can hear me.
Yes, we can hear you, sir.
Excellent. Thank you very much, and good morning to all of you, especially audience who have joined us, but also our panel members, and John, Madam Kosi, and Prof. Thank you, and council members. We acknowledge all of you. Thank you very much for joining us. As an institute, our mandate is to promote banking education and to regulate the practice of banking. That's the mandate we have under the Chartered Institute of Bankers Act 2019, Act 991. Now, strategically, our interpretation of that is to develop trusted bankers for the financial services industry, and the banking sector is at the heart of that. Now, we believe that's one side of the equation, though. The other side is that it's important. Our mandate goes beyond just the banking sector into educating the general public, but also the real sector. And the truth is that our industry has gone through turbulence in recent times. If you look at the last maybe 5-6 years, we saw the consolidation and reforms within the banking sector. In 2020, we got disrupted by COVID. In 2022, 2023, DDEP came through. And that has really, disrupted what we know, or we used to know to be risk-free investment destinations like banknote, government securities. In fact, as an educational institution or a professional body, we are really thinking what we used to teach our students about capital asset pricing model, that there's something called risk-free that has been completely disrupted. Question, therefore, is how do we, in the space of that, and in the space of that disruption and economic uncertainty and rising NPLs and impairments, and certainly in an environment where there's always the perception that MSME sectors or MSMEs generally are risky, how do banks find the right and profitable investment destinations in this context? And for us, that's an important conversation. Important also because we know that MSMEs are engines of growth and employment in this sector or in the economy of our country. They contribute significantly in employment and certainly to our GDP. And therefore, we think that it's important to find a balance. And I'm hoping that the panel members here will, and of course, there are SME communities that have joined us on this call, will find some way of cracking the code on how to really extend credit and support the real economy. And I think that's an important conversation, and that's our motivation. We are hoping that we can find some real solutions today. This platform gives us just the opportunity as an institute to provide top leadership, but also shaping the policy and really the agenda in terms of how we can reboost our economy by supporting the real economy. And I think the banks that we support have a significant role to do that, and we all do. And this is our part as an institute to support that conversation. Prof.
Thank you very much, Robert. So I'll come to very quickly to Madam Kosi Yankey-Ayeh, Chief Executive of Ghana Enterprise Agencies. And so we're hearing that there are challenges in banks lending to MSMEs, and yet they also represent massive opportunities for economic growth in Ghana. So this is my question to you. What are your views on the need for banks to interact with MSMEs, or what are your views on the need to bank the real economy? And how does your organization, GEA, support MSMEs in this regard? Madam, please.
So thank you very much for the question, and thanks for having me online as well. I think this is a very important question, and it's really something we shouldn't even be asking a lot of questions about, because it's something that must be done. So my thoughts on the need to bank the real economy. If 80% of your economy is the micro, small, and medium enterprises, that's a huge chunk of your economy. And so we shouldn't even take it lying down, but we need to really realize that this economy must be banked, and this economy needs to be supported. And the real economy is the majority of the economy. So for us, and really my thoughts on it is that we need to do more to bank the real economy. We need to strengthen that real economy and provide more support to them, either from the private sector point of view, from the public sector point of view. But at the end of the day, there's a need to bank them. Why is it so important? Because if you call them the backbone, then you need to support them, because they are the ones who are going to create employment. They are the ones who are going to bring about more innovation in the country. And they are the ones who would need to grow to help the economy also expand and our GDP to grow. And if that's the case, then banks need to pay close attention to them. And also, I believe that it will also strengthen the banks as well and financial institutions. For many years, people have underestimated the power of the MSMEs and what they've done for the economy and what they can do in the future. But more and more, as we pay close attention as Ghana Enterprises Agency, we see that there's a whole lot more that has to be done. There's a lot of intentionality for us to bring the banks and the MSMEs together and to really support this real economy. For us at Ghana Enterprises Agency, due to our interest in the MSMEs and the importance we place on the real economy, a lot of work had been going on at the background, especially since we realized that a lot of the banks were not providing the supports that was needed for the real economy. One of the things was to set up funds that could address the needs of these MSMEs, to set up emergency funds that would also build them in times when there were challenges in the economy or challenges globally. And so a lot of work has gone in, and a lot of access to funding has gone into these MSMEs through the interventions that we've provided. And the access to funding that we provided for a lot of these MSMEs, we worked very closely with the banks, because we felt that we were providing a structure that de-risked the MSMEs and made it really attractive for some of the banks. And we also realized that that intervention was allowing the banks to even identify where some of these MSMEs were in the country, so they could then provide the support that they needed for them. So Ghana Enterprises Agency has been doing a lot in providing various interventions to support. Apart from access to funding, we've also been working very closely with business development support um, groups and programs and persons and businesses and firms in Ghana to provide technical assistance that would also support these MSMEs and make them ready and give them the idea and the understanding that financial inclusion is really important, and the need for them to be a part of or join or bank, so that they can support their businesses in terms of growth, in terms of really expanding, and in terms of them also creating employment for others. So for us, the need to bank the real economy is high up on the list, and it's very crucial. And it would not make sense if we don't do it, especially since we continue to say that the MSMEs are the backbone of the Ghanaian economy. Thank you.
And thank you very much, Madam. And so I'm hearing MSMEs backbone of the economy. GDP growth depends very much on them. They create jobs and so on. And if banks engage with them, not only would it inure to the benefit of the MSMEs, but also banks will benefit and all of us would benefit, generally speaking. Now, so we have someone on the panel who is really very knowledgeable about what banks do. He has been a banker through and through, risen through the ranks in several banks, gone horizontally, gone vertically, has been a CEO of a bank himself, and he's now the CEO of the Ghana Association of Banks, which brings together all the banks operating in Ghana. Welcome, Mr. John Awuah. Now, the question comes to you. We've heard from Chartered Institute of Bankers Ghana what the reason for setting up this conversation. We've heard from Ghana Enterprise Agency Chief Executive, Madam Kosi, who has made a strong case why banks should take the MSME sector seriously. So I have two questions for you. Number one is, why aren't banks taking MSMEs as seriously as we hope they should take them? That's number one. And then number two, well, answer number one, and then we'll come to number two. John, please. John, you're on mute, please. So if you can unmute.
Yeah, thank you. So Prof, your question, because I went off briefly and.
All right, sorry about that. Yeah. So we have heard about how MSMEs are the backbone of the economy for a variety of reasons, and why it is good because of those reasons for banks to lend and provide financial services to MSMEs. Another reason was that it is also useful for the banks themselves. Banks will benefit. So I'm asking, if there are these compelling reasons for banking the real sector, particularly the MSMEs, why is it that we have not seen that level of interaction and banking of the MSMEs in there? So that's the first question. And after that, I'll have a follow-up question for you.
Right. Thank you very much, Prof. And thank you, Kosi and Robert. Mr. President, Ben, thank you for having me and the association on this very important and topical issue that as a country confronts us. And as we face it head on, I'm sure through this process, we will come out with some big steps that we have to take going forward to improve the way SMEs or MSMEs, as we call them, and the banking system interact. But first, let me situate this, the problem properly. I know Kosi has talked about how important SMEs are to the economy. Robert also touched on it. But when we say the real economy, who are we talking about here? We know the SMEs contribute a greater percentage to our GDP and also to employment. But the real economy facilitates production. They also facilitate purchases and seamless flow of goods and services within the country. And we all know once these three key items work together, then they will ensure proper economic stimulation, business expansion, job creation opportunities, reduction in unemployment levels and crime rates, and improved living standards for our people. And this is just a few of the benefits that I've decided to highlight. And it's also aside the speculative considerations that the real economy promotes activities that allow individuals to provide direct satisfaction for their needs and desires as well. But for that economy to thrive, there must be an unfettered access to the financial system towards the provision of a well-synchronized and affordable financial funding options for activities in this real economy that we all talk about. So stated differently, we are talking about financial economy providing an alternative funding mechanism that enables the actors in the real economy to avail themselves to these opportunities within the financial system. So an effective interplay of activities between the real economy and that of the financial system tends to promote business continuity and accelerated economic growth. So where are these real economy operators, where are they operating in? We've talked about they contributed about 70% to our GDP, 80% to our, roughly around for employment and employment generation. And the most critical aspect of the work that this real sector does is in the areas that they operate in agriculture, in manufacturing, service, technology, real estate, construction, fostering innovation and bolstering production. So I haven't talked about tabletops, paper pushers. I'm talking about people operating within the critical sectors of the economy where jobs are created. And that, for me, is what as a country we need the most. But despite this potential to ignite the innovation and economic growth and create job opportunities, as we all have talked about, there are problems within the SME arena in the multitudes. Of course, we are not here to focus on the problems, but just to highlight a few of them. We all know access to financing is one. Even where they have the access, the cost of that financing is another. We have a taxation system that also, in some respects, almost fight against growth and capital accumulation opportunities for the SME environment, inadequate infrastructure, steep operational expenditure, corporate governance challenges, inadequate investments in organizational structures, scarcity of skilled people to assist them, limited market access opportunities, insufficient business support systems and support services, and difficulties in identifying dependable suppliers. So all these are a multitude of challenges that, as banks, we don't just look at the business, we look at the business and say, how do we facilitate this business to move from where it is now to an arena where we are able to fuse our injection, which is liquidity, to enable the business to drive their objectives, thereby creating the jobs we are talking about. And the banks, as Kosi mentioned, expanding our spectrum of opportunities. So we are very much concerned that the SME environment is a difficult environment, or has been a difficult environment or terrain for the banking system. If you cast your mind back, a lot of the banks that have had challenges in the past were banks that were very deep within the SME environment. So it's not to say that banks do not want to do SMEs. If there's not a single bank in the country that does not have either a unit, a desk, or even an entire department for their engagement with the SME population. But in our current macroeconomic environment, where options in investments in government securities and the like are becoming less and less available or viable options, there has been this incessant call on us as banks to channel a lot of our funding to what now we are calling, I'll put in parentheses, real economy, to spur productive activities and economic growth. But that is not to suggest that as banks, we don't know what our core mandate is, which is, the banking 101, take money from surplus units and then make it available to deficit units. So we know, and that is where we make our money. But to touch on one or two of the key inhibitions in the system that really worries the financial system when they are giving access to financing or providing liquidity to operators in the SME environment is the number one is our institutional organizations, the structures, our judicial system, the Lands Commission, Environmental Protection Agency, all these pockets of institutions who all play key roles in making sure that funding to the SME is de-risked at the minimum. Of course, you cannot remove the risk entirely, but it's de-risked to the level where a bank will say, oh, I'm accepting this residual risk It's more or less the business that I do. And you don't give 100 and expect that you get an entire 100. There's always that possibility or probability of default that you will encounter. But when there is default, the problems the banking system goes through to ensure recovery so that they have liquidity to give to the next SME is where the challenge is. So as a bank, when you are operating and you have this SME who you gave a loan to 18 months ago, all of a sudden, due to one or two issues, the loan is distressed. You want to ensure recovery so that you can make that fund available to the next good SME. You go to the court system and it takes you 4 or 5 years. 4 or 5 years to ensure a common recovery. You are holding mortgage documentation. You go to Lands Commission and that mortgage is being remortgaged to somebody else, or that mortgage has been sold, or it's been, all kinds of things happening in these big national institutions. Sometimes it baffles us, the manner in which some of these big institutions, talking about Lands Commission, a trusted institution, just like the banking system, the judicial system, a trusted institution, and you go to the law courts and the way lawyers are playing the banks. One case, you can go to court 180 times and you will not have judgments because the lawyer comes today, tomorrow he says, I'm traveled, I have funeral, I have this, and there's tolerance within this environment that emboldens borrowers in a manner that when they borrow and they default, they become giants. They have money, you, the bank, you are now chasing them. So it provides a layer of difficulty for the bank. The next is the credit culture of the average SME before. And I'm happy that you mentioned that I've worked on the other side. So I have come in direct confrontation with operators within the SME environment where you have given a loan, the first repayment is a default repayment because the loan just disappeared. And there are mechanics and some conjuring of numbers, sometimes even the data you are working with is being completely cooked, no matter how diligent you are. If there is somebody who wants to cook information for you to take a decision based on it, I'm telling you, your likelihood of catching this business or this person is very limited. Again, when we are talking about culture, I'll give you a recent trend that as banks we are seeing. We know about this migrant workforce, doctors, nurses leaving the country. What they are leaving behind is a lot of NPLs. Through the process of applying for visa for these migrant opportunities in other countries where they will be remitting funds back home, a good thing for the country. But through the process, they approach their bank, they borrow money, and they use that to beef up their financial statements, which enables them to get the access to the visas that they want. They go and nobody makes attempt to come and clear the debt. I'm telling you, we are sitting on the time bomb as a banking system from that population of people alone. And how many of us have not encountered our security men, our house helps, or our friends who have just borrowed 400 cedis from Momo or a micro lending, and you say, oh, I'm transferring 200 cedis. No, don't transfer to me, transfer to this other number because I've borrowed on this phone, I don't want to pay. So there is a seeming threat within the society that tolerates default. And when there is default, then lending becomes difficult. And so we need to begin channeling our effort towards how do we create a system that gives the banking community a 360 view of the customer, so that if you are defaulting on your rent, you don't have access to a loan. If you have taken a supplier's credit and you are defaulting, you have no business approaching a bank for a loan until we are able to have this 360 view of the players that we'll deal with. I'm afraid we may have quite some time to further debate and debate and debate. And And Prof, basically that is, these are the one or two things that I would say just for a start. It's a plethora of lists, but as I said, I'm sure this forum wants to focus on going forward. So I'll look forward to maybe subsequent questions where we have opportunity to talk about what we should do going forward to address these challenges.
Right. So fantastic. Thank you very much, John. The one that is new to me is diasporans taking money and then when they get into abroad, given all the jobs they are doing, they still don't pay that. Robert and Madam Kosi, I want a quick reaction to some of the litany of issues that John has raised. Robert?
Well, thank you, Prof, and thank you, John, and certainly thank you, Madam Kosi. John, just listening to you and certainly listening to Kosi as well, for me, makes this conversation very, very important. And that's where I go back to in terms of why we must have this conversation. But what I also hear in John's submission is that beyond the submissions or beyond the conversation, we need some big steps forward. And he's touched on a number of things which I kind of agree with. Having been a banker before, and certainly having worked across the industry as a consultant, I've heard quite a number of things. Where I sit on the educational side today, it's even more interesting, the kind of things we hear. But we need to crack this code in spite of the challenges, in spite of the difficulties that we may have. I think stakeholders, and I think that's what John is suggesting, which I kind of agree with, that there's quite a lot a lot of stakeholders that must work together for us to crack this code, because the debate is not about whether we should bank the real economy or not. That's not the debate. The debate is how. And the debate is how do we get other institutions that must work and function properly, including ourselves as an institute, which is to say, provide a platform for us to have the conversation and have the right conversations. How do we get all the institutions working together? Because if we don't, then we don't have an economy. And I think that's what I'm hearing. And I'm glad that this conversation for us is one side. The other is actually, we're looking forward to having a similar conversation with SMEs. And that would be a conversation with SMEs and playing this back and saying, these are the challenges that banks face. And we are all Ghanaians. There's a credit culture dimension to this that we all need to pay attention to. And those are my comments, really, Prof.
So let me bring Madam Kosi here. And one of the things that I want us to bring into view and address, all three panelists, is the issue of the credit culture. So I hear three things that John brought to the table. The first issue is really the inherent characteristics of MSMEs, whether they have the people, they have the governance structures, etc., and things like that. Some of these things can hinder an organizational development, and therefore the prospect of it being a good bankable prospect. That's number one. Number two, I hear saying that even where people have that, there's a certain credit culture of entitlement which says that I can go and borrow money and I'm not going to pay the money. Number three is that we have a system within this country which emboldens that behavior. Among the systems that embolden that behavior are institutions, or the lack, some institutions and their behavior, and the lack of some institutions. The first one is the courts. If you want to recover using the court system, it becomes almost impossible, and that behavior. And the second one is when you want to actually then realize collateral that has been used for borrowing. Institutions like the Lands Commission are unable to assist in that regard. And then the third one is that banks do not seem to have a 360-degree view of what the customer is doing, partly because we don't seem to have things that are very common externally, such as credit rating agencies and so on, that every individual, once you give, in the case of the UK, where I'm sitting right now, your postcode, in the US, your zip code, or in other places, even your digital address, things can be tracked down to you, and your credit history will come up given that. So we hear that. We'll come to the solutions first. But I want some reaction from Madam Kosi Yankey-Ayeh on that, and her views on that, and then we'll pause and go for a poll from the audience. Madam, please.
Okay, so I think I hear my colleagues very well. These are some of the challenges we face. Yes, it seems like a litany of woes, but really is a challenge. And I think that's the most important thing, is really identifying what the challenge is, which has been spelled out, and how do we address the challenges that we are facing. I mean, this is the case that cuts across, because even from the government point of view, when we come up with programs to support MSMEs, you'd realize that there will always be challenges with how to recover those funds. And it's because we also do not have a culture of paying back. Either people assume that because it's not their money, or because it's either coming from government, and if it's not even coming from government, they do the same thing to the banks. So clearly there's a problem of how people pay back, and if they are willing to pay back. Sometimes I actually believe that it's not the ability to pay back, but it's more the willingness to want to pay back. And this is one of the things that have really destroyed and hurt the system. Because once a few people do it, people are actually, or the banks are very tight on making sure that more people benefit, or more people are given access to funding. And we see it impacting negatively on a lot of people. The other thing we also have to be clear is that a lot of banks talk about MSME support, but they don't really understand how to provide that MSME support, or even where to start, or even how to address it. And so more and more we see that, or we talk to people about how we form stronger support and participation from private sector, public sector, coming together to address some of these. And how do we create that opportunity that both of these sectors are talking and working together and able to address the challenges? My colleague just spoke about how the judicial system, in terms of, if you have a case and you go to court, takes forever. If you go to the Lands Commission, it takes forever. And true, it's some of the challenges that you see, and that you have to actually really pay attention to. And when people, or when those you lend money to, see that there are loopholes in the system, then of course they're going to take advantage of it. So listening to all of what my colleagues have said, my reaction to it is that the challenge is really, it is a 360-degree challenge. It's, everybody has a part and a role to play, because the blame rests solely on all of us. There's not one person that is free from the challenges that we face in this system, or in supporting the real economy, or the banks banking the real economy. It's a challenge that everybody has to address, because we're all part of the problem. From the government side, from the banking side, from the beneficiaries, or the lenders, or the creditors, we're all part of the problem, and we need to really think through the best way and implement the best way of how to address the challenges that we're facing.
Thank you very much, Madam. And now we turn to the audience. Mr. Patrick Barwood, who is the Head of Membership and Business Development for the Chartered Institute of Bankers, would come through now. He's going to administer just 2 polls for us, looking at what you feel and think about some of the issues that have been addressed. And we have just about 5 minutes to do that. But I'll leave Patrick to tell you what he wants you to do, and then we'll do that. So he's saying, what is the topmost obstacle that banks face in lending to MSMEs? Patrick, do we have the link to Mentimeter on the in the chat space, please? Patrick, please come on. Yeah. Hello, Patrick.
Hello, Prof.
Yes.
Patrick. So
okay.
So
yeah, please, Robert.
Yeah. So please, participants can go to the website to Google and enter menti.com and use the code showing. That is 35465447, and they'll be able to give a response to the question.
And so the instruction is go to menti.com and use the code that is showing 35465447, and then answer the question. We have one response so far.
hello, Prof.
Hello.
Yeah, so we have the link in the chat box now. So
okay, so there's a link in the chat box, and so you can also go to that. I can see over 200 people on the in this conversation, so I'm expecting a lot more responses than the 6 that we've got so far. And I'm putting my views on myself over here. Okay, so let's keep voting. And Patrick, do we have a second question?
Yes, please, Prof. We do. So we are going to project to the second question. So we have the second question now. So it says state one challenge MSMEs encounter when trying to access credit from banks.
Okay, and we'll be drawing this to a close in about a minute's time. So, so thank you very much for those of you who participated. There have been about 30, I'm seeing 39 responses, 40 responses. Let's keep it going. And panelists, I would like to now come back to you in terms of the issue. We'll have a look at the issues that have been raised, and we would, the panelists will get a chance to respond to that. But before we do that, can I just come back to you, Mr. Robert Dzato? I understand that the Chartered of Bankers Ghana has conducted a survey into the financial needs of MSMEs and their interactions with the banks. Are you in a position to share with us 2 or 3 of the most important findings you got from this survey and research?
Sure, thank you, Prof. And I'm trying to respond to your question with a few slides, if that's okay.
All right. Okay.
I just
that's
confirm
okay.
if you can see what I'm projecting.
I can see that, sir.
Sure. So what we thought we would do sometime this year was to get a perspective of banks. And the intention is to really see how banks interact and understand the MSME space, but how they interact more from a definition perspective. I think the next phase naturally for us is to also look at this from the MSME's own perspective. So let me say that this the context of the survey more a series of thought leadership events and reports to come from the Institute on this particular topic. So this is the first of in the series. But like I said, it's really around the interaction and the definition. We had 19 out of 23 universal banks participating. The point has been made that 7 out of 10 people employed in Ghana today work in the SME space, according to Ghana Statistical Services. So what's the snapshot in terms of what we found? By the way, the participants, if you look at the banks that responded, there were about 7 banks that are what we call indigenous banks, and then 12 of them foreign or regional banks. It was quite clear that banks see the MSME space as an opportunity area, one that is not exploited enough, and so for them is an opportunity. They also think that MSMEs, those that actually do business and do it well, are quite loyal. They stay with you through the cycle. But then also they see that the return in the SME space is higher if you get it right. In other words, there's also the other side, the higher the return, whereas the higher the risk as well. But one of the things that kind of struck us was the fact that MSMEs or banks that responded, and these are SME MSME heads across the various banks responding to us, that they see the MSME space as the growth pools in terms of portfolio growth for the banks. And they've identified a number of needs, that SMEs or MSMEs have. I won't spend time on that. On the interaction bit, what was interesting is that most MSMEs like to be relationship managed in terms of the interaction. We also see MSME heads telling us from the various banks that there are 3 key sectors predominant for MSMEs in our country and where they also see opportunity. So you see manufacturing, you see the services sector, and then you have the commerce and finance. Interestingly, we asked the question, what's the perception of MSMEs, heads, bankers, in terms of MSMEs' likelihood to default on credit relative to others, that other businesses? And you see very interestingly the responses which we are showing here. More likely to default, it's high. Equally likely, it comes in between. So you see that there's that real perception, and just based on their portfolios, right, saying that MSME is more likely to default on credit advanced to them. So that's the summary of what we've done. What we've also seen is that there's quite some convergence in terms of the criteria that banks and also other institutions like the IFC, part of the World Bank, the European Commission, and even our own Ghana MSME policy. The criteria convergence is, you find that almost all of them use turnover as a basis for defining or classifying MSMEs. Then, of course, the number of employees, total assets. The European Commission tends to look at annual balance sheet as well as one of them. But the other thing which is interesting is the threshold. And remember, I talked about the criteria, but also the threshold of the turnover. And it's interesting what you find. IFC definition of MSME from macro perspective is something in the region of 100,000 in terms of turnover. If you look at small business, by definition, you then see $1 million to $3 million. If you look at our own Ghana MSME policy, that is micro is below 25,000 USD. Small is 25 to 100,000. I think what we are noting, and if you look at the banks one, which is in cedis, you then find that typically banks will say anything micro or anything below 5 million is a micro business. Below 37 million is small business. And then you then find a medium above that. So first thing is that you then find that whilst there's convergence around the criteria, the threshold, there are inconsistencies in terms of, so it presents some statistical challenge in terms of when we are even reporting to the central bank, because different banks have different definition thresholds. What is it that we are presenting, and how do we even statistically analyze and conclude what we are credit has been advanced to the real sector or the SMEs, right? So again, I won't spend time on this. You find that some banks use different combinations, but what is dominant is the turnover as a criteria. Now, that criteria and threshold kind of varies to some extent between foreign banks and local banks, and we are just showing where the local banks place emphasis, and you find out where the foreign banks also place emphasis. I think the key thing is that banks define MSMEs more in quantitative and non-quantitative terms. So one of the non-quantitative side is more the level of formality of the MSMEs in terms of governance. But then, of course, the foreign banks place more emphasis on the turnover, and the threshold is much, much higher for the foreign banks relative to the indigenous banks. I think what is important is stakeholders need to have some alignment on these thresholds. In terms of interaction, very quickly, I think I mentioned the MSMEs more relationship managed. And again, I indicated that about 95% actually see That's banks see MSMEs as rapid growing segments in terms of their portfolios, right? We took a view on the interaction more from what are the enablers to the relationship between, or the interaction between banks and MSMEs, and then what are the barriers? And I think most of them have been touched on. You may want to look at that, and this is again something we looked at from operational perspective. Enablers are more the level of formalization of the MSME and cash flow projection. That's what the banks are looking at. And then, of course, what insurance do they have in the event that something goes wrong, which they always do. On the barrier side, you then see lack of bookkeeping and incorrect, and I think John alluded to this, is lack of bookkeeping, but also even where the books are kept, the quality and accuracy of same. And then, of course, the default perception and lack of collateral. So those are some of the key things we found in this research. I think our point of view as Chartered Institute of Bankers Ghana is that the criteria, the definition criteria and threshold inconsistencies exist, and those need to be aligned. But even more importantly, beyond giving a threshold turnover, the definition approach at the moment ignores the impact of inflation and currency fluctuations, which we are quite used to in our market. It's also the case that MSMEs, in our view, portend high growth opportunity and high return, which means they are viable segments if we get the right approach to banking them. In other words, they could be, or they present a viable investment destination for capital allocation from where we sit. But there's also the desirability. So the desirability of banking the SMEs is not in doubt. And so the viability is also not in doubt. What is in doubt right now is the feasibility. How we crack that feasibility code is important. And like I said before, this is the first in the series of thought leadership and reports that will be churning out. The insight gathered here, which we have just shared, is more from the bank's perspective. We'll try and do same on the SMEs so that we can glean insight from the MSMEs perspective as well. Thanks, Prof.
And thank you very much, Robert. That is a very comprehensive review of that. And I hope that this will be turned into a thought leadership piece that can be placed on your website, but also that can be circulated across to generate a lot more conversation about this very important segment of our national economy. Let me go to Madam Kosi. We've seen what the CIB Ghana survey has just said, but that is from the perspective of banks. They have not yet spoken to MSMEs in order to be able to do that. So I'm coming to you, Madam, as someone who has a finger on the pulse of what is happening in the MSME world. What do you think we must do from a policy perspective to de-risk MSMEs and to make them more attractive to banks, given all the conversation that we've had? So now we are moving into solutions mode. Madam, please.
So as you rightly said, we've talked about a lot about the past and some of the challenges that we've seen, and we have to really look forward and see what are the solutions that we need to. And to be able to also address that, we need to talk a little bit as a government institution, Ghana Enterprises Agency, what have we been doing and what more can we do to really de-risk these MSMEs and make them attractive to the banks. One of the things we realized when I took up my position at the Ghana Enterprises Agency, which was then the NBSSI, was really the important question and the challenges that everybody spoke about, which was lack of access to finance. But then one of the things we also realized was lack of information. And from a policy point of view, how do we create opportunities for information to be shared to both the financial institutions and to the entrepreneurs to let them bring more awareness into what was happening? And in order to bring that awareness, and by bringing that awareness, some of these MSMEs will then prepare themselves and make themselves attractive to the banks. So government had a very important role through policy. So that's what led to the design of the MSME policy and entrepreneurship policy at that time, because we didn't have one for the country. And we realized that a lot of things that would help prepare these MSMEs to be attractive to banks was not being done. So the policy clearly spelled out how we were going to look at technical assistance, the business development support, and really going deep into what we had done in the past as to what had been successful, what policy direction we had taken as Ghana Enterprises Agency that has seen a lot of our MSMEs attract funding. And how then do we spread that? So then the policy directive that we had, even in the design of the MSME policy, was to support using this principle of Kaizen, which we realized was improving productivity, was helping put in place the structures and the strategies that we needed to prepare these institutions or MSMEs to access the funding. You heard in the past that some of these MSMEs institutions did not even have the governance structures, even in terms of how do they able to increase or scale up their businesses. And this tool that we had, which became a policy directive for all our offices, was really looking and hammering on how best we could prepare MSMEs to do that. So as a government agency, the MSME policy became that foundation on which we built on it. We committed and mobilized really a lot of resources, and we believe that we should be able to do that through the support we have and the existing resources that we have to be able to assist as well. One was looking and working very closely with the credit bureaus, even from a policy point of view, even if they were receiving government funding or not. How do we ensure that the credit bureaus were strengthened and were abreast with what we were doing and what others were doing? Because if you're going to de-risk them, other banks want to bank with them. They need to understand if they've taken funding before, who they took it from, and if they paid, what was their history. And for a lot of these MSMEs, they were not really, their information was not on the credit bureau for them to be able to be reported. But it's really important that we look at how best we can get these credit bureaus working really from a policy directive. So working closely with Bank of Ghana to ensure that we're using tools such as credit bureaus to de-risk MSMEs. The other was, when you go across other countries, you realize that the different stages of funding. So there are angel investors, there's funding that comes from governments, there are all sorts of different funding, and then there's also banks that provide that funding. So banks are just one part of access to funding that MSMEs have. But they're very crucial and important parts, because if you look at the Ghanaian MSMEs, very few of them want equity. A lot of them would like debt, and a lot of them take more debts than they will take equity. But if you see a lot of the financing mechanism, a lot of them focused on equity. So really from the policy perspective, how do we also train or bring to mind some of these MSMEs to understand the differences and what was at play in the system and how best, so that they could also become attractive. So then we, from a policy perspective, instituted business development support and technical assistance programs, where we designed with some of the top consulting firms very rigorous and intense training, technical assistance programs that went in depth to these MSMEs to help them put in place the structures that the banks thought was needed but did not exist. And so from a policy point of view, we work with them on the governance side, we work with them on even registering their businesses, being able to get the regulatory supports that they needed, and building on that to make them attractive to banks, to want to even invest, to want to lend, want to support and work with them. So those were some of the policy directives we took as Ghana Enterprises Agency or developed. The other was we consciously started working with banking or financial institutions. So in the past, if there were any funds for lending from the government side, it was done internally. But one of the things that we thought was important was how do we partner with banks? Because we can't continuously lend or provide funding to these MSMEs. If we're going to make them attractive to the banks and we're going to de-risk these MSMEs, then we need a strong partnership, both government and the banks. So with this type of partnership, how do we maybe provide the first funds to these MSMEs to build them, to strengthen them, to get them to the point where it makes sense for banks to invest in. But going through this entire process with the banks, because we make sure that the MSMEs are banking. So it created an opportunity, and we believe that this really was a very big way of getting more people into the financial sector. And we want to continue to do that so that we, in the process, de-risk the MSMEs and make them attractive to the banks. So two really policy directions that we've been working on was the MSME loan facilitation scheme, which helps MSMEs to be investment ready to prepare and submit loan applications to banks. The second is the MSME capacity building program, which provides the training and technical assistance to support MSMEs to improve their financial management and business skills. Going forward, there are a number of things that we are working on, or also that can be done from a policy perspective to continuously de-risk the MSMEs and make them more attractive to banks. And this includes, as I've mentioned earlier, improve the credit information infrastructure, and us also supporting to make sure that these MSMEs are credit worthy and that we are reducing their risk in lending. The second is also work with government in the provision of really select tax breaks or other incentives. And we're working as the Ghana Enterprises Agency, really coming up with new regulation and engaging people to see how best we can work together to incentivize the banks that lend to MSMEs, and also create maybe a fund where we could also work with some of these banks to continuously ensure that from our side, we are de-risking them and also making them attractive to the banks. Because as I said, it doesn't take one partner, it takes both. The other option that we've looked at from a policy perspective to de-risk is really to establish a credit guarantee scheme. We've done a bit of that in the past, but we want to really extend it and expand it to see how best working together with the banks would also reduce the risk for banks in lending to MSMEs and make them more likely to lend. And most importantly, the Ghana Enterprises Agency has what we call the business advisory centers and business resource centers. These centers have been set up to create a seamless platform for MSMEs, so that it reduces the regulatory burden and also gives them access wherever they are. We believe that these systems that we have put in place, that we are now initiating, and those that we've already started and hope to continue, would create the opportunity for banks to work closely with us and for us to work closely with banks to see that the policy direction is de-risking these MSMEs and making them also attractive to the banks. But at the same time, banks also have to be attractive to the MSMEs. You know, a lot of times people say that, oh, the interest rates are the only challenge, but it goes beyond that, right? There's so much that needs to be done. The banks themselves need to be accessible. They need to create even the right products that the MSMEs would be interested in. And one of the things that we've all realized is that it's not only about the financial aspect, but the technical and business development skills training of these MSMEs alongside financing de-risk a huge part of some of the risk and challenges that we faced. And so together we need to work to make sure that this is happening. Thank you.
Thank you very much. John, I would ask you to come in and weigh in on this conversation soon. And after John does that, I will then check whether my very good friend, I call him the financial philosopher, Mr. Socrates Afram, is on. If he's on, then he'll come after John. So, John, actually, we've had in terms of all of these things, the challenges and what the policy perspectives of GEA is. Can you lean in this conversation in terms of the innovative ways that banks are using to get around some of the challenges that you so eloquently talked about in your previous contribution, and then what other solutions, given what Madam Kosi is saying, are you working with GEA and others to ensure that MSMEs continue to interact with banks effectively? John, please.
Yes, thank you very much, Prof. Okay, yeah. Thank you very much, Prof. And thank you again, Kosi very happy to hear a lot of the things that you and your agency have been undertaking to help all of us within this system to de-risk SMEs, to increase the traffic flow of funding to these businesses, to enable them scale their operations in the manner that will enable them create jobs and help with the economic recovery that we are all looking for. I'm very excited at, in fact, everything that you have said. From our side, because it is also very important to us, when this new Chief Justice assumed his position, I'm sure one of the first letters that she might have received from any private sector entity, apart from the normal congratulatory messages, is the one that came from the Association of Banks, which is a letter that cataloged the issues that we want to work with her office to see how best we can, the two institutions, the judicial service and the banking industry, of actually the financial services in the sector as a whole, can work together to also improve the recovery process when we get to that point where facilities get distressed. We see a lot of weight in that area because it is that which provides the liquidity to enable banks take advantage of all the good things that Kosi has run us through. So we are, it's gone to her. We are on standby. We have information that should be calling for a meeting pretty soon for us to start, this work that enables us to clean the judicial system and, streamline some of the challenges and bottlenecks that as banks we go through in our recovery drive. The other one is Lands Commission. There too, we set up a committee with Lands Commission. We even provided or opted that they could set up an office which will be funded by us. The people there will be working for the banking industry to ensure the security and sanctity of mortgage documentation. That committee's work is ongoing. We also know that they are doing everything to automate their systems so that some of these land documentation that get missing because somebody intentionally got the file missing will be a thing of the past. So whilst we are working on the building blocks, we are also trying to work with institutional order to clean up the institutional bottlenecks. The other one that we have not touched, the EPA, because you see, most of these SMEs are, as we've all have come to know, are in the real sectors. They are in manufacturing. So environmental governance issues are critical. That is where EPA comes in. Sometimes a common report from EPA, SME needs a facility to perhaps undertake a little bit of expansion. And they need a report, from EPA to say that, oh, this thing is okay, you can now proceed with your expansion program. And that report can take 3 months to 6 months. And funding has timelines. And if the fund is to be made available at a certain point, and because of bottlenecks within the operations towards getting the funding, it goes to 1 month or 2 months or even 1 year beyond the critical point. What you are doing is creating an opportunity for default, which will be not due to the fault of the SME per se, but because of institutional bottlenecks. So once we are done with Judiciary and the Lands Commission, we will sit with EPA to see how we can work together to also improve their structures and how they work with the financial system. But whilst we are this, business must go on. So you would have, if you listen to the radio or watch television, you find that banks are now working with identifiable groups. You find sometimes you hear about women in business, a bank providing funding structure for women entrepreneurs. We've seen a lot of banks also in the area providing startup opportunities for young entrepreneurs. We've also signed even MOU with some identifiable groups on streamlining supply chain financing. One critical element of that, which is I was personally involved, is the one we signed with the Ghana Chamber of Mines, we've signed local content law, which is in place. But there is no liquidity to enable the local enterprises take advantage of the local content law. So working with the Chamber of Mines, we devised a product program, and through that, some identifiable groups within that ecosystem, have access. And once you go through more or less what we call product program, and it is fitted within a certain risk acceptance criteria, then they go and bring this, go and bring that, situation can be averted or better managed. We know if you speak to an SME or an entrepreneur, if you speak to 10 of them about the challenges, about 9 of them will say access to financing. By the time you probe, you find that about 5 of them will say access to financing. By the time you probe further, it will be 2 or 1 who will say, no, then my challenge is not really access to financing. Just about 2 say it is still access to financing. So a lot of the challenges Kosi talked about, the governance systems, the bookkeeping, the capacity building, creating market access, and also making the SME fund ready. There have been a lot of SMEs who are doing good businesses until they received funding, and then the business collapsed because they were not fund ready. The man has been operating with 60,000 at scale for 10 years, taking his children through secondary and university. For 15 years, all of a sudden you go and give him 500,000. You've confused him. He is not ready for that level of funding. He has no capacity to manage that level of funding. So from us, our ability to understand the SMEs and agree at what point the funding levels that we can assist and gradually scale their operations to the level where, as their structures are improving, the governance systems are improving, the funding quantum is also increasing, so that the two will marry to give birth to the optimal scale that drives business growth, which is what the SME wants and which is what the bank wants. We've also entered into strategic partnerships with development partners. A lot of the banks are working with institutions like KFW, GESAL. We are working with MasterCard Foundation. And these institutions, what they do is to help us in risk participation or risk sharing, which also, in one way or the other, helps to de-risk the SME environment and enable the banks to do more within that system. And I think Kosi touched on the SME's appetite for loans. It is extremely important. Debt is just one of the funding structures that are available to SMEs. But talk to 20 SMEs and just about 1 or 2 be interested in equity because they want to own it all. But owning it all will not give you the kind of speed to scale up. So in all the interventions that we are having, the capacity building, I think we need to properly embed using case studies from elsewhere, where the big names that we know around the world, Alibaba, he doesn't own 10% of Alipay, Alibaba Pay or Alibaba. You talk to Mark Zuckerberg, he doesn't own more than 30% of Facebook or Meta. If you talk to Bill Gates, he doesn't own even 2% of Microsoft now. But the name is still on the brand. So you can still have your name on the brand, but not have 100% stake in the business. And it is critical that, because that is a patient source of capital. Equity is a patient source of capital, and SMEs must be very open to partnerships. I know that sometimes they are concerned about along the line challenges. Just make sure that at the origination, there is proper paperwork and documentation as to who does what and who does what, who provides what. And then you find a proper balance within your capital structure that gives you the least cost to operate and make the kind of returns that will keep you in business and also enable you to pay off your loans if you have any. And most of all, as banks, we are now strictly complying with the risk parameters that we have set for our various portfolios. So for the SMEs, I'm sure most of the banks run product programs for SMEs. There are some who have vanilla products for the SMEs. There are others who have clear-cut products geared towards SMEs in certain sectors. And it's important that as banks, we strictly comply with these risk parameters so we don't, in our attempt at helping, don't also put depositors' money into too much risk. And finally, last but not the least, monitoring. The average SME has a penchant for diversion. And here, I'm sorry, I'm almost generalizing, but if you leave the business to operate on its own, there will be diversion. Diversion into other businesses because they like to set up businesses. So diversion into other businesses where they have little knowledge of converting that equity or that money into business. And sometimes the cash cow, which is making the money, then begins suffering. So it is important that as banks, we improve our monitoring mechanism whenever we want to scale our intervention within the SME area. And I'll give you a typical example. Years ago, there was an SME in Abosokan that we were funding, giving money every time. You know, you go there, warehouses, there are boxes. You go, you count, everything is fine. It's either the working capital is in stock, or is in the account, or is a receivable. And it was very easy until one day we decided to say, oh, instead of going to just count the boxes, let's go and do physical inspection of the materials in the boxes. And there were nothing. You push one box and 500 boxes will fall down because the boxes have been arranged in a way for the bank to just come and see, but not carrying any kind of economic value. So you need to stay very close. And that is what I'm sure most of the banks are doing now. And so if we are a bit kind of dragging feet, it's not because you don't want to do it. We are doing everything to de-risk the system so that we can lend safely. As a depositor, when you take your money to bank and 500 cedis, you want your 500 cedis back. So when we give that money and we are losing for every 100 cedis, we are losing 18 cedis, then there is a problem which must be addressed. And that is why we are doing this, to address that. Thank you very much.
Thank you. I like the one about the boxes being empty. All right, ladies and gentlemen, we have a few minutes for you to ask questions if you want to ask us any questions. So I can see Alberta Kokupom has raised her hand. If we could unmute her, she can ask her question, and you have strictly 30 seconds to ask a question, please. Thank you. Albert, and then Eric would also do this thing. So Alberta Kwakupum, please. You are muted, please. Okay. Yes. All right. Can Eric quote it, please? Whilst Alberta is unmuting.
Can I speak now?
Oh, yes, please. Okay, Alberta, please.
Yes, good. I just want to share a few instances of bankers themselves learning how to and appreciate MSMEs and their businesses. Sometimes we bulk all products together and also do repayment schedules just using the book knowledge. I've had a few forays in both sectors, both microfinance and also in corporate finance. And I've realized that we use basic corporate finance techniques to monitor SMEs. And we need, as bankers, I think CIB, this is a time for us to now go into training bankers into these new areas. That is SME finance and their operations under the various categories. Very, very important. Otherwise, we'll be just throwing money away. Thank you.
Thank you very much. So that's Alberta. And please, Eric Corte. Eric, if you are speaking, we cannot hear. Please unmute yourself. And then we have Sofa Kwam. Okay, Sofa, can you come in, please? Sofa Kwam. And after Sofa, Equia Adom. But Sofa, please.
Hello.
And can we lift up the muting? Can we unmute
Hello.
them, please? Yes. All right, Sofa. Yes, please go ahead.
All right. So mine was just it's just a small contribution following the discussions keenly. And I think I like what you said about the fact that something ought to be done. And about how the banks are able to lend to the MSMEs. And when I think the other lady was speaking, one of the things I felt that as a country we need to do is to be able to have is it a central unit or bring back NBSSI or some kind of organization where they will not just be like a credit registry for the MSMEs, but it would also be like any center, it would be like a credit bureau. And because as you realize that because of the very informal nature of our economy and the attention most of the MSMEs, the banks need to do a lot to make sure they even monitor into them. And most banks, that will be a tall order to handle. That means that a whole unit, probably of not less than 100, 150 staff, should be, and that would then even not make it economically viable to lend to. So,
Okay.
in terms of the policy, I think that then there should be probably the government should come up with another NBSSI to be doing all those things for the bank. So when a bank approach such a unit and say that we have one of your members apply for facility, give us information on them. That information will be credible. That information can be something that the bank can be able to use to analyze and assess the company and lend to. Thank you.
Okay, thank you very much. We'll come to Kosi to respond to that, but I think she's touched most of that. Let me go to Equia Abuajiwa Adom, please, your comment. And then after that, Mr. Shaibu Mustafa Mohammed. But Equia, please, come in. Equia, you are muted at the moment, so we cannot hear what you're saying. So if you unmute yourself, and if technically she cannot unmute herself, can the one controlling? Yeah, okay, Equia, you're unmuted now. Let's go.
Okay,
and then
thank you
Shaibu,
very
when it
much.
gets to your turn, unmute quickly. Yeah, please,
Okay.
let's go ahead.
So I happen to be in a training, and the specialist in fraud, Ransford Nanado Jr., he articulated clearly that one of the things that was going to help us as banks was if we were able to come up with a bank verification number for each customer. That was going to help reduce the rate of default, because when a customer approaches a bank, you are able to key in the bank verification number and get all data on this particular customer, where they have been to, their activities, and so forth. And so I was wondering whether this has ever been considered, and if it has, the stage at which it is now, because it clearly looks like the way forward now if other jurisdictions are able to do it.
Okay. All right. So we're looking at bank verification number. It's essentially the issue of traceability, and it's also the issue of credit history and business history. So we'll come back. I'll note that as a question, and put it down. I have two more people who would come, and then I'll come to the panel to respond to those comments and questions. Shaibu, please come in now. And you are mute. Yeah, you've unmuted. Thank you very much, Shaibu.
Thank you very much, and very insightful seminar. So my point is that if we make effective use of the Ghana card, and in collaboration with the Credit Reference Bureau, if, for example, every bank complies with the requirement to ensure that for every credit you give, you do a full search, and if there's any default, you feed back to the Credit Reference Bureau. If we do these things together, I believe the industry will stand to benefit a lot. And even for the micro loans that the telcos we do know, for every micro loan, it is the bank that underwrites those loans, and the risk is placed on the bank. So if even we can get this information as part of the credit reference database, it will help build a very strong credit environment for the banks, and it will enable to the bank's benefit. Thank you very much.
Thank you very much. Okay, so last person who would speak is Eric Niboy Quarty, please. Please come in, Eric, and unmute yourself. Thank you. Eric, we're waiting for you. Hello, Eric. You're unmuted, but we cannot hear you. All right. I think final person, Mary Asarieboa, please. Let's hear you, and then we move to the panelists.
Thank you very much, and good morning, everyone. I know a lot has been said already, and I just wanted to add one more dimension that we probably want to look at, and that is the issue of ethics in business. We have looked at all the issues of credit history, traceability, getting accurate information, documentation, and all of that. They are all very good. But one thing that Mr. Awuah mentioned that I think we should critically look at is the fact that as a people, we have allowed ourselves to if you like, enable, loan defaulting. And that's because maybe our ethical issues in business are not very strong. So perhaps that's one area we need to begin to drive at as bankers, as a society, as leaders in the nation, to insist on getting our people practice ethics in business. So I just want to bring up that part of it, that we need to look at that. It may go a long way to helping us in what we do. Thank you for the opportunity.
Thank you very much. Panelists, you've heard a few comments coming through, and the last one really is addressing it through the issue of ethics, particularly the issue of integrity, promise keeping, etc., when it comes to lending. And then, of course, the issue, two of the speakers touched on issues of traceability and using possibly a bank verification number, or accessing through the Ghana card and the whole digital infrastructure and footprints that people will leave. What I want to do is come to John first and ask you for some comments on this, and then if you can add your closing comment on this issue, that would be good. And then we'll go to Madam Kosi to also look at her closing comments on that, but in relation to some of the things you've heard. And then finally, we'll come to Mr. Robert Dzato. So, John, the floor is yours, and you have roughly about 5 minutes to respond to all of this. Let's see how you go.
Okay. Yeah. Thank you very much, Prof. And the issue around BVN, and I like the response that Shaibu gave. We have a product which is even better than the BVN. And in Ghana, sometimes it's very difficult particularly as a business pressure group like we are, when issues of national importance comes up and it becomes a political game store. Ghana card, importance of Ghana card to the financial system, it is, you can't even imagine it. It is so critical because it achieves everything that BVN will do for you. Because if your account in Ecobank is linked to your Ghana card, and that of Standard Chartered is linked to your Ghana card, your rent, you have Ghana card as to your tenant, and Ghana card is on every financial transaction that you undertake. Sitting at one place, I pull that Ghana card number, I get everything you have been doing within the financial system. So as bankers, I think we also need to let our voices be heard. Sometimes our voices are overshadowed by political sentiments, and once the politician steps in, it's a no-go area for anybody, because then it becomes tainted. If you say this, you belong to that order. If you say that, you belong to the other order. Ghana card should never be politicized. It is one most important financial verification instrument that will forever be good and great for this country if we all go behind it and we use it to update our financial records or financial records of our customers. The other one, someone talked about bringing back NBSSI. I'm not sure about that, but we can achieve getting back NBSSI, the work that they used to do, the capacity building. I remember when I was in university, where they came to train us as students in business, which was very good. But NBSSI's role, or all the things that we want to get for the financial system from NBSSI, an efficient and all-encompassing credit reference bureau system will give us even more. Now, the credit reference, as we have it now, takes only data from the from banks. So you can be a very bad tenant, you don't pay your rent, have troubles with your landlord, and you are credit worthy because we have no visibility of your default. You can be dealing in business. You can either, when in business, whether take supplier's credit or you use a bank debt to maybe for your working capital. If you are very good, your bankers are happy with you, but suppliers are extremely unhappy with you, it should reflect in your credit score. And all this will be achieved if we get these other institutions to be submitting data, as the banks are doing, to the Credit Reference Bureau, so that we have a 360-degree view of everyone who is undertaking financial transaction in the country. I think it is fantastic. And if we do it that way, within a matter of a few years, this discussion will become like a cake, because we will not have any opportunity to even discuss this matter. And I think it's a very good point that work has started in that area. Bank of Ghana working with us, and the Seaboard and NPA. We are broadening Credit Reference Bureau to capture BDCs and oil marketing companies. Through Bank of Ghana, we will mostly move to the next line, where landlords will be required to send credit references on their tenants. It will go to suppliers. If you are supplying any kind of thing, you have to be submitting data on clients to the reference bureau, so that we have a very good view of the people we are dealing with in the financial system. The other one, which I believe is the umbrella for everything we have discussed today, is the ethics. As bankers, ethics is everything to us. So if we are operating, and now we have reason to believe that ethical standards, even within the banking system, may have been compromised in a way, and work must happen aggressively to improve the standard of ethics and business conduct in the banks. You will go through a lot of the bank credits that have gone bad, and you can trace the distress to more or less a collusion between a relationship manager and a relationship officer and the client, to the extent that sometimes it is the bank staff who rather tells the client how to lie on the document so that it can pass the test of credit. So we need, as an ecosystem, to take these matters seriously, particularly on the matters of ethics. It is not just on the business side. It is our own people as well. I went to a sporting arena, and the table where I was sitting, someone just said something. Oh, as for banks, we give loan and you are calling us for something. I said, oh, that's not banking. That's not what you do. And around the table, every businessman around the table said they had had an experience. So there is a problem, and that problem must be fixed. We, as an association, we have a duty to contribute to the fixing. Chartered Institute of Bankers, you have a duty to also help us in fixing the ethical standards, which presently we do not believe is at the right place. We have the document, but the document is not enough. It is it's necessary, but it's not sufficient. We need to move beyond it and get standards in the right place. I should think that should sum up.
Yes, that should sum up for it. And thank you very much, John. That is very helpful. Before we bring Madam in, please, let me just introduce Mr. Socrates Afram, who is the Deputy Chief Executive for Finance and Admin at GCB Bank. And Socrates has silently listen to some of the things we've talked about. And so, Socrates, we just ask you to make a few comments about the GCB stake as a major stakeholder within the MSME space and within the banking space on banking the real economy. Socrates, please, over to you. And if you unmute yourself, then we'll hear. Thank you very much, Socrates.
Thank you, Prof, and good morning to you and the panelists and all listeners. I want to say to bring to the fore that are confronting SMEs. For us, GCB was actually incorporated to thrive, to access economic development of the nation. Because at the time it was perceived the foreign banks were not giving much attention to the indigenous businesses or indigenous Ghanaians to promote their businesses. And so for us, SMEs, and for that matter, the small scale businesses are very key for the growth and all the aspirations we have as a nation. The growth of the real sector is good for all of us. Why do I say that? Because that is how we can create employment for the youth. That is how we import dependency. That is how we can restore value so that we will not see a rapid and a lot more good things will follow. And so as a bank, what I would say is that businesses do go through challenges. Thankfully, the CEO of GAP has done justice to the topic, especially from the bankers, because he's an ex-banker. Kosi also did a great job by she's seen working with the SMEs. But what I will add is that much as businesses go through these challenges, what banks expect is that businesses come forth and open up, be transparent, and banks are ready and willing to work with you, because we do appreciate that without the businesses, there will be no business for us as banks. In the past, we had done so much by exposure to government here and there. Yes, government from the banks, but we believe that if private enterprise matter, the productive sector was supported a lot more, even government finances will improve, because government will have a lot more revenue by taxing these enterprises. So on that score, one, I will encourage that when the challenges do come up, businesses should be sincere enough approach their. These are the challenges I'm going through, and the banks are more than willing to work with them. As GCB Bank, what have we been doing? You recall we embraced the 1D1F program, we supported a number of promoters to start green. Some of the lessons learned are that some of the projects were poorly conceptualized. And why do I say that? As you provide the funding, the proposal looked tight. Once the funding kicked in and then you were executing per the proposal, a whole other things came up that had not been considered. And so you tend to see that if the guy had come asking you for 1 million, it ends up being 10 million. And mind you, banks operate within their risk appetite and risk framework. And so if the project is getting to a stage where it's going way beyond their risk appetite and the risk framework, it becomes a lot more difficult to continue to fund. Of the actives and diversion of funds. Entrepreneurs have 10 businesses. Today, you may not get a complete view of all. And so as part of the recommendations, the connection that Mr. Awuah spoke about, control being connected to the reference bureaus. We also encourage that the Registrar General's Department gets also connected so that if Socrates came to a bank to borrow, we can set Socrates from and get to know all enterprises, all businesses that is involved in, so that if something untoward had happened in one of the businesses, that could be on it, and then that will inform the bank in their decision. So DCB Bank, we are open to support SMEs, and I did indicate to you the support we provided to the 1D, 1F. We worked with Madam Kosi on the CAP project, ongoing. We are part of the new program that has been launched by the Finance Ministry to entrepreneurship. So our doors are opened, but we want entrepreneurs to be. When there are difficulties, feel free. We do know that life is full of challenges. When the challenges do come, just approach us, let us know, and work with you. And together, we can make the nation better and make your companies greater. Thank you. These are the few comments I will have for now. Prof, over to you.
Thank you very much, Socrates, and thank you. And the message is that where there are challenges, come, let's talk together, and knocking two heads together, we'll be able to solve them. We come to, for your closing comments, Madam Kosi Yankey-Ayeh, in response to bringing NBSSI back, the issue of Ghana card, etc., and then the issue of the ensuring that the various parts are talking to each other. Madam Kosi Yankey-Ayeh.
I think there's been a lot of interesting conversations going on, and one of the things that really struck me was the bringing NBSSI back. I think one of the things we've been fighting was to not bring NBSSI back for a lot of different reasons.
Fantastic.
One is because the National Board for Small Scale Industries was set up over 30 years ago when the world hadn't changed so drastically, right? And so in terms of the type of support that was given, in terms of the services that we were providing, in terms of the beneficiary, those who could benefit from the programs that we had. And so to actually move forward with the new times, we had to transform. And to be able to transform, that meant that we had to design an MSME policy that had never existed in this country. So if you're going to go back, it's going to erase a lot of the things that we have done. So one was the design and the completion of the National MSME and Entrepreneurship Policy. That gave us policy directives on how we were going to work on access to finance, how we were going to do business development services, how we're going to create all the opportunities that you're now seeing in the system that is supporting MSMEs. For the first time in this nation's history, we've been able to create access to funding of over 700 million Ghana cedis to over 300,000 beneficiaries. It's never happened before. And it all happened because we transformed, we changed the acts that governed us. It allowed us to create a database that also was accessible to the banks to help them really de-risk a lot of these MSMEs and provide access to funding in ways, and even create access to banking support to these MSMEs who had never even banked before. So unfortunately we cannot go back to the old NBSSI. The new Ghana Enterprises Agency also came about because one of the things we realized, and there's actually a study that says that if you continue to call something small, it stays small forever. So when you have an institution called National Board for Small Scale Industries, then we weren't really being proactive in thinking about the future, that we wanted these businesses or enterprises to grow. So the mandates then expanded and gave us the opportunity to build the businesses from micro to small to medium, and then eventually to large, so that then they could actually then work closely with the Ministry of Trade as well as others. So for going back, we can't go back, but going forward, the GEA provides all the things that have been talked about, and there's room for us to improve and do more. And there's room for us to really come up with new regulations and policy to assist all of us to achieve more for it. With the Ghana card, I believe strongly that it's a beautiful initiative. It's a good thing. And when we talk, I mean, the whole conversation today is about how do you de-risk these MSMEs for the banking sector. And what has the Ghana card done? For the first time, you have all your information in one place. You have an identity. You can actually trace people, even through the digitization process that the government has worked on, giving people what is it called? Addresses, the addressing system in ways we haven't seen before. And whether we like it or not, this digitization in Ghana Card has opened up the economy to a certain point to help all of us build these MSMEs and move on. For me, just to end this conversation from my side, is that government's priority is to see MSMEs thrive and survive. Because as I said at the beginning, it is really the backbone of the economy. 80% of the economy, creating most jobs for the Ghanaians. And if we want to continue talking about employment and job creation, it's the MSMEs that's going to do that. But they can't do it alone. They need the support of all the various parties, and specifically for the conversations we are having today. We have really untapped opportunities that banks should explore. How do we build these MSMEs from our side, work closely with the banks and bring them together? So we need to come up with new products. We need to work together and engage on what products would work for the beneficiaries. How do we use the existing structures and systems to really build on the MSMEs? How do we work with the Chartered Institute of Banking and the survey they undertook that highlights manufacturing, the services and commerce sector high on the list of sectors that need support or that is prevalent in Ghana, which is very similar to the data that we also have. How do we all work together in a collaborative effort to ensure that we bridge this gap? It's important, because if we don't, then we're doing a huge disservice to about 90% of your economy. Thank you.
Thank you very much, Madam. And indeed, Robert, that gives me a segue. The last thing that Madam Kosi Yankey-Ayeh said gives me a segue into a question that I want to ask. So the issues that have been looked at in this conversation, we want to be able to continue the conversation, but we want to continue it extensively and intensively at a level of depth that requires some research. And my understanding is from your presentation is that you're going to research into all of those things. So what's the next phase of your MSME research, and what will CIB Ghana require in order to continue to provide such insights and such forum to the banking industry? And you have about 2 minutes to do that.
Sure. So thank you, Prof. First of all, let me say that what we sought to do was to create a platform like this for this conversation to happen. But beyond that is then taking the next steps. And you're absolutely right that we've looked at one side, which is the bank side. The next phase really is to speak with the real MSMEs and put some of the issues that have been raised as challenges, both from John's perspective, Kosi's perspective, but also Socrates' perspective, and see how we can find a reasonable, workable pathway forward. Because, see, the truth is that I'm told there's a saying in South Africa that the poor cannot sleep because they are hungry, but the rich can also not sleep because the poor are awake. Now, we cannot work as a country. Our economy will not work without a real economy, but a real economy cannot be banked and financed properly without institutions working well. And I like the point around ethics, and I think that's where I want to land. By all means, we will do the research on the SME side. Of course, we want partners, and Kosi, thank you for raising that in terms of how we can partner together. And we are calling on other institutions. John, yourself, GAB, let's work together on this so that we can really find some solutions. But of course, you know that research also requires funding. But I'm quite keen that as an institute, we would be able to find a pathway forward. Let me just say that the issue of ethics, we are currently working with a central bank to roll out some ethics certification for bankers across the banking industry. And John, we've had some discussions on it. I'll come back to you on that. But this year also marks the 60th anniversary of the Institute, and our National Banking Conference, which we have annually this year, is heavily focused on ethics, and it's National Banking and Ethics Conference, because we really need to put ethics high on the agenda of banks and bankers, but society as a whole, because that's the crux of the matter. Because the people we are talking about as SMBs or bankers, they are Ghanaians first, and it's all of us. I think our mandate is very clear, which is to bring education. We'll continue to do that, but also bring education that's supported by industry insights like we've done today. And the conversation doesn't end here. We'll continue beyond this place. Prof, thanks. I'll hand over back to you.
And thank you very much, ladies and gentlemen. I think that our panelists have done well in raising the issues. They've not shied away from it. Innovative solutions have been talked about, and then what we're hearing is that things are being done at the moment. Please, there will be the chance for you to evaluate today's program. You will be sent links, so that you'll be able to tell us what we got right, what we didn't get right, what we could improve, and what kind of programs we want to see Chartered Institute of Bankers doing. I think for me, what I take from here is that a lot is being done, but a lot more needs to be done. And we've got to start talking to each other. My summary is mainly taken from an African proverb, which says, if you want to go fast, go alone. If you want to go further, go together. And I think as the various stakeholders within the financial ecosystem go talk to each other and move in partnership, I can say that together they can all go further. So thank you once again for spending your time with us at this moment. And it rests for me to thank Madam Kosi Yankey-Ayeh, Chief Executive of Ghana Enterprise Agency. Thank you for participating. My friend, my very good friend, Mr. John Awuah, Chief Executive of Ghana Association of Banks. Thank you very much for participating. My very good friend, my financial philosopher, Mr. Socrates Afram, Deputy Chief Executive for GCB Bank. Thank you very much for your contribution. And our host, Mr. Robert Dzato, Chief Executive of Chartered Institute of Bankers, Ghana, and then the President of the Chartered Institute of Bankers, Mr. Ben Amenume. Thank you very much for providing us this opportunity and this forum. And it rests for me to say thank you also for being with us all throughout as an audience. Thank you, and bye-bye for now. Bye-bye. Thank you.
Prof, I believe the survey is up, so people can evaluate the program.
Okay. So if the survey is up, yes, if you can evaluate the program now. And how do we do that? Where do we do that?
There's a link
okay.
posted in the chat box. So
in the chat. Okay. All right. So if we go to the chat and we go to the link, then we should be able to access that one and fill that one. And please give us your feedback before you go, because that is important, and we can get better programs as good as this. This has been very fascinating for me, and it's more than an education for me sitting where I'm sitting. Thank you very much.